After a modest start, the oil industry really began in the US in the 19th century, as a period of rapid industrialization took hold. The new materials being produced meant that pioneers could explore for and begin pumping oil from places that previously had lain undiscovered. Within a year of discovery of oil at Spindletop in 1901, in the state of Texas, there were 1,500 oil companies registered, which began the real growth in the US oil industry. US oil companies then began looking overseas. First it was to Venezuela in 1910. Historical documents had pointed to the Spanish incomers in the 16th century utilizing bitumen as a sealant. Then in 1933 came the first contract to drill for oil in Saudi Arabia, after evidence of oil seeping from the sands in the region. Then, apart from a brief hiatus during the Second World War, new areas were being discovered as companies began experimenting with offshore drilling platforms. As a consequence of oversupply, prices began to drop, and as prices fell, the expensive process of investment on long-term exploration projects were put under strain. By 1960, feeling the need to steer control of oil production to maintain prices, an agreement between oil-producing nations was made to control supply. OPEC, the Organization of Oil Petroleum Exporting Countries, was formed and has since expanded to include 14 countries. The US and Soviet Union, at the time the two biggest producers, were not signatories and continued to pump in high volumes to maintain stable pricing in response to OPEC cuts. But as the US reached peak production, control over global pricing shifted to OPEC. The oil crisis in 1973 showed just how powerful OPEC had become, with its dominance of membership by Arab countries. With the US supporting Israel in the so-called Yom Kippur War, the Arabian producers proclaimed an embargo of oil exports, and as a consequence, prices rose over 400% between October 1973 and March the following year. The next oil crisis developed during the Iranian Revolution in 1979, which was then followed by a 20-year bear market. Most recently, new technologies have aided a new oil boom through the use of hydraulic fracturing oil-based shale structures, although this is a more expensive delivery and is unlikely to come to the fore until conventional oil resources start to run dry.